Hello everyone, and welcome to another edition of the Token City Show. Today we have with us a luminary of the central bank digital currency space. His name is Igor Mikhalev. He is partner in emerging technologies strategies at EY-Parthenon. He is collaborating with universities such as the University of Amsterdam and MIT on research projects focused on CBDCs and the macroeconomic impact of the introduction of digital currencies. He is also the creator of open source Web3 protocols and applications such as the CBDC tracker or Blue Shift. Igor, welcome to the show.
Hey, thanks. Hi, everybody. It's really great to be here, broadcasting from rainy Amsterdam, but nevertheless, nice and warm at the show.
Thank you. We know you had to juggle your schedule a little bit to be here, so thank you very much. And I propose that we start with the basics. If one uses your CBDC tracker, we can see that there are dozens of pilot projects and research projects on central bank digital currencies, commonly known as CBDCs. So what are these CBDCs? There are two main categories, wholesale CBDC, and then there's retail CBDC. Tell us a little bit about that.
Yeah, absolutely. Yeah, so, there are many different types of thinking why CBDCs are being introduced into the world of business and finance. But I would say that we saw the major acceleration in discussions on CBDCs during the time when back then Facebook Libra was trying to be introduced, and central bankers thought that, well, probably they need to have a response towards the world that expects a programmable digital new generation currencies available, right? And ever since, so already a few years since then, we saw a major uptake in discussions around CBDCs, and multiple central banks around the world, together with commercial banks, of course, started working on pilots, started thinking of proof of concepts as well. And at some point, some of the banks have also proceeded with implementation. So in terms of wholesale versus retail, you can think about retail CBDCs as probably what you would closely understand as cryptocurrencies. So retail CBDCs are to be held by individuals. So that's where the similarity is. But where the similarity ends is that the claim on the central bank persists in case of CBDCs, right? So that central bank can provide a wallet to a citizen, and that's why it's called retail, because every citizen can have a retail individual account with a central bank. So that's in a nutshell the discussion about retail, and there are different flavors of retail CBDCs. But again, what's important to understand here is that relationship between central bank and a person. So namely, this direct relationship is what makes retail. Right. In the case of wholesale, I personally see wholesale introductions of CBDCs more of an evolutionary type of efficiency gain type of implementations. It's where commercial banks and central banks improve incrementally RTGS, real-time gross settlement types of rails to be able to transact faster or cheaper between commercial banks and central banks, right? But typically in wholesale CBDCs, we don't see citizens involved, and citizens are served by commercial banks as a downstream type of operation.
Thank you. Riffing off that a little bit also, what are the benefits, would you say, and would CBDCs, do they compete with real-time gross systems, settlement systems? Would they work together? Can you explain a little bit that, and what are the benefits of implementing a CBDC coin?
Yes, and honestly, the answer is not one size fits all. It really depends on two things in a particular country. It depends on the maturity of real-time gross settlement infrastructure and the flexibility of the regulatory environment. So in countries where the flexibility is high and the maturity is low, we see disruptive implementations taking place. We see basically CBDC implementations taking place of what currently in mature economies with sort of rigid frameworks are currently being served by RTGS types of environments and wholesale infrastructures. Right, so this is what CBDCs are doing. In terms of benefits, again, this depends on that sort of quadrant. So if you think about to access again the maturity of RTGS environment versus the rigidity of legal infrastructure, in all those four quadrants, the benefits are quite different. So when it comes to benefits in Europe and in the US, where the maturity of RTGS infrastructure is high and the regulatory flexibility is low, well, typically we see incremental benefits, and the most disruptive incremental benefit that I saw from discussions with the ECB and, well, as I'm based in the Netherlands, Dutch Central Bank, is the ability of the ECB and the Dutch Central Bank to reach individual citizen with their wallets. Right? Because if as a citizen now I can have a direct wallet with the central bank, I can count on risk-free money given to me by my state, and also in case of failure, so let's imagine the banks have collapsed and we have another crisis, and everything is basically pretty chaotic in the domain of transfers, and you cannot withdraw anything. Right? Maybe we have a major war, God forbid, or something like that. Well, in this case, the ECB still can disperse money to me as a citizen, and I'm potentially going to be saved and helped in a better way, as opposed to trying to find me and give me a check, or trying to reach me through a commercial bank that is not working anymore. So, benefits like this, plus incremental benefits in terms of speed of settlement and lower cost of settlement, is what we typically see in mature economies with regulatory flexibility on the low, and well, the maturity of RTGS infrastructure on the high. So in the opposite quadrant, where we have the opposite situation, well, sometimes you can think about it as countries of Latin America. Well, you see other types of benefits, and those benefits typically have to do with potentially being able to provide a more solid foundation for national currency than existing currencies, because that's where the centralized nature of a CBDC can take place, and that's where the blockchain-based, let's say, foundational capability of CBDCs can be exercised, right? As opposed to a European environment where blockchain-based CBDCs will not take place. Right? So in countries with high flexibility in terms of regulatory environment and low maturity of current or real-time settlement infrastructure, that's where blockchain-based implementations might take place, or are taking place now in case of piloting. Right? And the benefits there range from financial inclusion of underserved individuals to things like being able to get into a more stable situation with your macroeconomic policy and with your financial policy overall, where citizens have a higher trust in their government, not debasing their currency, because with the blockchain infrastructure in mind, the decision-making is more decentralized, more transparent, and you have the actual codified rules of what needs to happen with your currency in different situations, present on chain and accessible to people that use that type of currency.
Okay. All right, understood. That was a very interesting response, and based on that, of course, you went from one continent to the other, and I was wondering, what would be in your view, a potentially final implementation of CBDCs at scale in the world, let's say in 2030, 2035? How do you see different CBDCs working together, and would that mean that international trade would be solved?
Yeah, that's a perfect question. And in terms of solving international trade and solving the conundrum of how to renovate global payments infrastructure, in my opinion, four scenarios are possible. So CBDCs, be it retail, wholesale, is just one of those scenarios. Maybe let's put them aside for a while and focus for a moment on the other three. So I think what can happen next to CBDCs is potentially public acceptance of public cryptos. So cryptos arguably have already existing rails for transferring and making payments and being a store of value in some cases. So this is one. The second one is the acceptance of stablecoin type of payments, maybe a more likely one, right? Where existing stablecoin vendors and stablecoin implementations gain traction instead of CBDCs. And the third one is tokenized commercial bank deposit type of implementations. So that's where commercial bank deposits become an alternative to CBDCs, and banks start serving decentralized, in many cases, payment networks and participating in decentralized payment networks voluntarily without a central bank interfering. Right? And in this case, we would still see innovation and ability to solve the question of global trade and global remittances in terms of speed, flexibility, safety, and cost, right? But without the CBDC. So I think, yeah, important to mention that there are four scenarios, three of them I described. CBDCs is surely one of them. Arguably, it's the most likely scenario in multiple countries where government is in a strong enough position to introduce a top-down project around CBDCs. So we saw something like that happening in China. So in case the CBDC scenario prevails in a certain country, again, I think that we will not see the same response around the world. I think around the world we will see one of those scenarios prevailing in one country or the other. But where the CBDCs will prevail, we will most likely see retail implementations that again have this major benefit in place, which is giving citizens access to central bank money and central bank avoiding a mediation done by commercial banks in this structure. And this is now all just being tested. Question in this model of CBDCs, in the retail model of CBDCs, what the compensation structure will be for commercial banks that will potentially lose the ability to attract enough deposits. What will happen in terms of KYC and AML? So if central bank serves that CBDC to citizens, then who will do KYC and AML? Will that still be banks or not? Right. So a lot needs to happen in terms of pieces falling together to form that ecosystem in countries where CBDCs will prevail. So, to conclude, four scenarios, CBDC is one of them. If CBDCs will be prevailing in a certain country, most likely it's going to be retail, because wholesale is nothing but an incremental improvement. And for retail CBDCs, we will most likely see implementations without blockchain, something similar to what happens in China, something similar to what happens here in Europe. And for blockchain-less implementations done top-down by a central bank, we will most likely see no programmability. So all in all, the main benefit here is, again, that a central bank is in more control, and the role of commercial banks is challenged in a healthy way so that they can find themselves a more future-proof types of ways of making money. So they will go into deciding which new business models will still be relevant for them in the future. So I think that is more or less how the future should look like.
Okay. Thank you for that. Let's now come back a little bit to Europe. You mentioned before that you've had discussions with the European Central Bank. We recently had the announcement that we have entered the preparation phase for the launch of a digital euro, but it doesn't mean that we are for sure going to have a digital euro. What can you tell us about the digital euro that is being prepared? What's the intention behind it by the central bank? Some people say that, oh my God, a central bank digital currency means absolute power by the central bank. And how do you see those concerns vis-a-vis the actual project that is being prepared?
Yeah. Well, just a few weeks ago, I was at an event organized by the ECB and the Dutch Central Bank there were commercial bankers, and we've been discussing, and also there were actually political parties. So we've been discussing what the benefits of introduction of CBDCs actually are for the end users, for the citizens. Yeah, in case of digital euro, well, if you ask a person outside here in Amsterdam or anywhere else, I think in a European country, do you want a digital euro? Probably they will say, what? We already have a digital euro. It's here on my iPhone, my bank app. And how come it's not digital? Do you want a programmable euro? Like, what? I already have a programmable euro. So I want to schedule payments for whatever it is, for my mortgage, something like that. It will be done. So it's kind of already programmable. So I think pool-wise, marketing pool-wise, it is not that people really want that for some reason, right? And payments are fast and cheap. So that is the feeling that typically people get if they poll people's opinion in Europe on digital euro. That said, there is a lot that can be done in the existing financial ecosystem to innovate, to squeeze out all the inefficiencies, and to also bring more efficiency in the cross-border types of transactions. Right? So that all in all, digital euro, not that citizens need it. Is it innovative? Not so much, because throughout all the design choices and steps that have been made, we have moved from some programmability to no programmability. We have moved to maybe DLT to no DLT. So in the end, the main innovation in the whole digital euro game is that capability that central bank is building. So allowing that wallet relationship between the central bank and citizen. And of course, the question here is, again, what is the compensation model for commercial banks in Europe that will potentially lose business? And the answer here is that, well, the cap on the maximum amount of how much CBDCs can be stored in your wallet will be introduced, so that it will not disrupt your business as much. But then the question again is, with that, what is the actual value? So if as a citizen I only can have like 3,000 euros in my CBDC wallet, what if I need more? Why would I even use it? So yeah, it's full of questions, and we are stuck in trying to find consensus. Unsurprisingly. Can we get unstuck and go to something innovative and interesting with regards to the digital euro? I am not sure. I would be surprised if we will even make it through and have a wide-scale implementation of digital euro, where, as designed, every citizen will have a central bank-issued wallet, right? Because nobody has enough status quo challenging power to say, hey, let's truly challenge the way commercial banks and fractional sort of banking is organized, and let's invent the wheel a little bit towards the future in a good way, so that we are having more stable, more inclusive, faster and cheaper and safer, of course, again, types of transaction mechanism with digital euro. So, I think, all in all, the situation with consensus finding is quite concerning. And to your question on the security of transactions and, of course, the privacy of transactions, well, I think security-wise, we're in a good shape, and all the standards are in place so that your data is not likely to be leaked. However, it's going to be a bit like all eggs in one basket if data of all citizens' transaction data is stored in one place. In case of privacy questions, yeah, of course. The main conundrum here is that as citizens we have these expectations that we can use cash, and cash gives us complete privacy. So this is not something that should be challenged, therefore. However, on the other side of the scale here is the question of financial crime. So if we want to truly eradicate financial crime, do we want the privacy? And honestly, personally, I don't think I can answer that question. So this is what we have to rebalance for ourselves as an equilibrium as citizens of Europe.
Okay, understood. I think maybe one last question. as I'm sure you know, in the tokenization space, digital asset space, we now have the first Europe-wide sandbox with a pilot regime for digital assets. What do you, I mean, is there the possibility that such an approach could work in terms of course, the sandbox, the pilot regime is, you could say it's conservative. Of course, there's an argument for that, but there's also an argument that, I mean, it does some degree, it does allow for some degree of innovation, of new applications, of course. So, do you see a possibility that that could be something in the cards for the digital euro?
Well, in terms of the sandbox approach, I think we don't really have a wide-scale sandbox approach right now in sight for CBDCs. But what we do have, of course, in terms of digital euro implementation is all the discussions around which parties need to be piloting the solution. And earlier this year, we had all this conversation with Worldline, Nexi, Santander, I think a few other banks that were participating in the pilot. So I think the ECB, they of course want to pilot it step by step and not break anything. Question is, will that warrant wider scale piloting with a sandbox? I am not sure, because probably in the minds of people designing digital euro right now, it's more like an implementation that requires one-time pilot with a few participants, and then we just go to scale. So I am not sure there is a need for piloting in the eyes of people that are designing the program right now. But if it was a digital euro on the basis of blockchain, where you have SMEs potentially building decentralized apps on the foundation of the national currency, and then this would be resulting in creation of new businesses and truly challenge the commercial banking and payments types of players. Well, then we would definitely have needed a piloting regime of some kind and sandbox of some kind.
Understood. Okay, we are reaching the end of our time. Now, I'm just gonna ask you to tell us what you want to tell us, what you're working on, what you want people to know. It's all yours.
Yeah, absolutely. So, first of all, happy that whoever is watching this, you connect with me. Let's get connected and follow each other either on LinkedIn or Twitter. It's good to be together as a team, well, as a group of individuals, as a community, let's say, excited about digital currencies and what they can bring to us as a society. Personally, I'm extremely excited about what I call capitalism 2.0 and the impact of new generation of financial infrastructures on the capitalism as system as we know it. Right? I think it misses some of the vital and necessary components in the equation of what we think is good business, what we think is the performance definition, good performance of business. And I think that a decentralized, blockchain-based or not, but decentralized ecosystem of financial applications and solutions for funding, for payments, for transacting, for creating foundational components for new generation companies, for ownership structures, right? So moving from shareholder capitalism to stakeholder capitalism part as well. I think this shift, this tectonic shift in how we have been perceiving those, and those institutes were all born out of the Industrial Revolution, right? Essentially, so nowadays, all of this is potentially challengeable, and we can innovate that. And I think it's extremely exciting time we have. We have the technology in place. We have the willingness in place to do it as well. So I would only wish that people would increase the level of literacy with regards to what's going on, what the future of money holds, and also get excited about how we can create a more inclusive more sophisticated economy with regards to taking into consideration the true set of all performance indicators of what constitutes performance of individual companies and nations overall. With this, thanks very much, and yeah, let's get connected.
Awesome. We love the notion of capitalism 2.0. Thank you so much for being with us tonight, Igor. That was a pleasure.
The pleasure is all mine. Thanks very much, everybody.
All right, that was all for tonight. We hope you enjoyed our conversation with Igor Mikhalev, expert in central bank digital currencies, and we wish you a very good rest of the day. Bye-bye.